Hello, everybody. Welcome to a new episode of Tech Can Save Us podcast brought to you by Literal Humans. As always, I am your host, Paul David, founder and CEO of Literal Humans. And I'm joined today by Jinesh Vohra, who's the CEO of Sprive. And we're talking about reinventing how we do mortgages, how we pay off mortgages. Welcome to the pod.
Yeah, thank you for having me, Paul.
So by way of introduction, Jinesh Vohra is the founder and CEO of Sprive. As I said, Sprive is a UK-based fintech on a mission to help homeowners become mortgage-free faster by using spare cash to automatically overpay their mortgages in the most efficient way. And this is a topic that's near and dear to my heart. My dad was a real estate broker, so I learned a lot about residential real estate and mortgages and houses growing up. And so I love to talk about real estate tech and fintech in that space. Since launching, Sprive has helped users save millions in interest and years off of their mortgage terms. Before founding Sprive, Jinesh built his career in finance and strategy with experience across investment banking, venture capital, and startups. His personal frustration with the UK mortgage system ultimately led him to build a product that empowers homeowners with more control, transparency, and better financial outcomes. I love when the products they're born out of frustration and need. So yeah, excited to dig in. Let's jump in. So Jinesh, mortgages are one of the biggest financial commitments, usually the biggest, I'd imagine, people ever make. Yet most homeowners barely manage them quite well once they're set up. They struggle. It can be an opaque system. From a market level perspective, what would you say is broken about how mortgages work today?
Yeah, I mean, and thank you for the kind intro. I mean, in terms of the whole reason why I built Sprive was on the back of my own kind of personal mortgage journey and the pain points that I faced. I think when when we're kind of looking to get on the property ladder, you're so focused on getting that house, getting the set of keys, and you want your own piece of land, a place that you can call home, and you sign a mortgage offer document. And it's only afterwards that it really dawns on you on the size of the commitment that you've actually taken on. Initially, you're very focused on the monthly payments and whether you can afford them. But I remember vividly seeing the mortgage offer document, and it's saying for every £1 I borrow, I'll be paying 50p in interest. And this was about 13 years ago. And you can obviously look at the macro landscape. Interest rates have kind of really dramatically increased since then. And so more and more people now, that cost of the mortgage is very, very expensive. And you take a step back, and lenders don't really build technology to help homeowners pay off their mortgages faster and save interest. And in the UK, we have this real structural problem where by the time you can save enough for a deposit, you're typically in your kind of mid-30s or even early 40s. And because property prices are just increasing so rapidly relative to salaries, people are borrowing more for longer. And so it's very common now in the UK for people to take 30 and 40-year mortgages. And so it's something like, it's really scary. 3 million people will have a mortgage past the age of retirement. Imagine being in your 60s or even your 70s and still having a mortgage to worry about. It's scary. And you never know what's going to happen late in life. You could lose your job. You could fall sick. I remember when I started deciding that, look, I didn't fancy paying £150,000 in interest, and I spoke to my wife and I was like, let's do something about it. We started to make mortgage overpayments, which is effectively where you start to pay more than your fixed monthly payment. And by doing that, if you do that in the right way, you can kind of save interest and pay off your mortgage earlier. And even when I was doing that, it was me tracking that the progress through spreadsheets. I really had no idea on the impact it was having. I remember refinancing and remortgaging, and that was a real pain point where you have to fill in like reams and reams of information, hours on the phone with the mortgage advisor, filling in forms, that process taking like 8 weeks to actually happen. And it's just a very, very traditional market, not very consumer centric.
Yeah.
And so that was kind of the reason I felt like there's just so much that can be done to educate the customer. And so that's one of the reasons why I built Sprive.
Yeah, I remember moving over here and just being like blown away by what I perceived as inefficiencies in the market. I remember my dad who would come go to work on a Monday, be like, I think I'm going to close a house this week, and then by Friday like it was done. You know what I mean? And so I've had friends here of just it's taken them months and months and months, and that's just on the front end. So like, would love to get into that with you. Like, what inefficiencies do you see in the UK mortgage market that stand out to you most? You called out people not really understanding how effectively to overpay and to do it in a way that helps them. And help us understand, like, do you think this is a design problem, is an education problem, or something deeper in how the system is built here?
I think it starts off with actually buying a home. You're right. typically, I think it's about 9 months from when you actually find the house that you want and someone agrees to,
Insane.
essentially sell their property to when you actually move in. And that process in itself is a complete kind of nightmare, because in the UK, that what tends to happen is obviously you have a chain. So you're buying a property of someone, but then you can only buy that property if the other person can ultimately sell their property. And so there's a domino effect. And if someone in that whole chain walks away, then the whole thing collapses. And that happens typically half the time, that because it's so difficult to get onto property ladder, it's so difficult to get a mortgage. Half the time, people that apply for mortgages actually they're not successful, and therefore that makes it very, very challenging. And there's no real, like, in some markets in other countries, there's your it's a lot harder for someone to walk away. There's like a financial loss that you'd incur if you agree to sell your property or buy a property and then someone walks away. There's recourse. Whereas in the UK, you can kind of walk away and there's nothing that anyone can do about it. So getting on the property ladder in itself is very challenging. And if you ever deal with like solicitors, and then you deal with a mortgage advisor, and then you deal with all the other kind of all the other kind of people that are involved in it's very, very challenging. But then once you have the home, like I said, it's then you're kind of stuck to your own devices. And if you want to take back control, there isn't anything really out there. Your mortgage advisor helps you get the mortgage when you first buy the property, and then they don't really get in touch until the next time you're looking to refinance. And then I think people just generally think, well, I've got to make my monthly payment, so that's the focus. And they don't holistically think about, like you said, Paul, at the beginning, that for an average person, their mortgage is their largest household commitment. And so how do I effectively manage that in a more better manner that ultimately leads to more control later in life? And so obviously that ties down to overpayments. And then the refinancing side of things, like lenders, again, like the top six lenders have a big chunk of the market share, and things work. And so they're not really motivated to actually make things super efficient. I mean, really nice to be able to click one button and refinance over from an existing mortgage that you're on to like the best mortgage deal in the market. Yeah, technology innovation, the lenders have been very slow because there's no real need to really invest, because fine, it can take 8 weeks for a customer to refinance, and that's a very painful process. But ultimately, they built all this legacy technology, and so unless someone comes in and really scares the living daylights out of them, they're not motivated to really change the customer
The
experience.
D word, that disrupts, right? The disruption. So like you're trying to do that to some extent. I'm always fascinated by these like facets, these little cul-de-sacs of capitalism, as I like to call them, where this is a free market, but like actually we've got like a duopoly or an oligopoly and a couple of different players, and they've just created this thing and it works for them, and they're not motivated to like change it on behalf of the consumer to give them a better experience, God forbid. So the question was just kind of like, and we're kind of moving into talking about the opportunity and the product, really. So really framing for the audience, like, how much money are homeowners leaving on the table, or, by not actively optimizing and overpaying their mortgage? What are the benefits that they could unlock by better optimizing how they deal with their mortgage?
Okay, cool. So in terms of the way you can manage a mortgage, especially if you're focused on like paying off your mortgage faster and saving interest, is, in my view, and I'm obviously slightly biased, is to download an app like Sprive. That is totally our mission. And when we kind of took a step back and we started speaking to customers about the pain point around the cost of debt. And I think the first point is actually people don't understand how much a mortgage actually costs. And so we do that very early on in the journey. We'll initially have sliders where you can play around with the app, and you can see, look, if you're based on your mortgage balance and your monthly payments and the term, this is the amount of interest you're likely to pay over the life. Customers save money on their mortgage. So one is this concept of shop away your mortgage. So if you think about it, Paul, everyone's got to live. Everyone does their weekly grocery shop. Everyone buys cups of coffee, takeaways, holidays, clothes, whatever it might be. And we have a culture, especially here in the UK, that people tend to, out of necessity, spend a lot of what they earn. But imagine if you can turn every single shop that you do into a mortgage overpayment that helps you pay off your mortgage faster and save interest. That's effectively what we built at Sprive. We have access now of thousands of brands, including 7 of the largest supermarkets, so the likes of Tesco's, Asda, Sainsbury's, Morrison's, Amazon, John Lewis, Boots. And every time you shop at those brands, you earn money towards your mortgage instantly, which with one tap, you can pay to your lender. And as you start to do that, you can visually see how much interest you're on track to save, how many years you're on track to knock off. And that in itself is just very, very impactful. And then if you can afford it to do so, you can also put spare cash towards your mortgage. So some of your listeners might be familiar with apps like Moneybox or Plum or Chip. They're like these auto saving apps that help you find and squirrel away bits of money. Those apps help people kind of save to invest. We're helping people essentially pay down their mortgages faster and save interest. And so if you want and you feel like you can afford like £1 a day, we can help make that happen. And as you do that and you start paying that money to your lender, you can then start to see how much interest you're on track to save, how many years you're on track to knock off. So initially you might start off using the app and you might see that you're on track to pay off your mortgage 3 months earlier. And then before you know it, 6 months earlier, 9 months earlier. We have customers, like I saw a social media post a few days ago where a customer using Sprive is on track to save £84,000 in interest and not 14 years off their mortgage. I mean, the difference between being mortgage free at 70 versus 60 or 60 versus 50 is absolutely life changing.
Massive.
And so
Yeah.
I think the key is to kind of take back control and either use an app like Sprive, because that's just a really nice way to get started, because you don't need extra money to be able to start to take back control. And then if beyond that, you can charge your progress even further.
Just to take a step back, so we're getting into product here, but so it sounds like, in terms of the opportunity, it's, helping people understand and reduce the cost of debt, helping people maybe, become mortgage free sooner. So there's like a sort of time thing there. And then what else would you say are kind of like the I'd say benefits and kind of opportunities there? It sounds like they're just saving money across the board while also reducing the cost of debt. They're overpaying, but they're kind of investing in a longer term, sort of financial health. Anything else you'd say in terms of benefits for this?
Yeah, I mean, I think it's when you take a step back, you never know what's going to happen late in life. So you could lose your job, you could fall sick. I worry about AI, what that could do in terms of just, being able to sustain a career for, the next 20, 30, 40 years. And obviously the lenders want to get paid their monthly mortgage payments. And if they, if you don't, then you could, lose your home. And so I think for me, it's all about kind of de-risking the future, so that if you can shave 5-10 years off your mortgage, then you're reducing the risks of having those types of financial troubles. I also think that if you are mortgage free, it really changes your outlook. As an example, I'm really fortunate that I had a good job, so I was in investment banking, and I was able to pay off my mortgage. But that was the only reason how I was able to go to my wife and say, hey, look, I've got this crazy idea. We talk to customers all the time and ask them, like, if you paid off your mortgage and you're mortgage free, what would you do? And you can literally see their eyes light up, and it completely changes the way they kind of think about the future. They might change their job, they might go part-time, they might go traveling, gets them to unlock hobbies, new hobbies, or do existing hobbies that they will like. And so the more you can kind of take control of the mortgage, because that's one of the biggest barriers to doing things that you want to do, because it's ultimately your largest household commitment, then that is essentially, in my mind, a positive thing. And I think it's a positive thing for many homeowners in the UK.
Yeah, I love that framing of like the opportunity it unlocks. Like, it's not just reducing the cost of debt. It's not just, saving a bit. It's not just, getting it paid off sooner. It's, it unlocks a different way of thinking, a different way of life. Let's jump into the product. And I would love if you can you started to talk about the product a little bit. If you can walk us through, tell us how it differentiates, itself from traditional, mortgage apps and things like that. Talk to us about automation, why it's so important. Talk to us about how it, adapts to different income patterns, especially with people who have variable cash flows, and talk to us about safeguards. Like, what have you put in place to make sure people don't overcommit and then feel financially stressed?
Yeah, so that's a good point. So look, initially, in terms of like financial commitments, it's focused around shopping. So the first step is to start shopping, and we're not trying to encourage people to spend in a different way than they would today. A lot of brands and so it's just making your existing shopping that you feel that you need to do to kind of live your life and do that in the most effective way. And to give you an idea of the power of just doing your shopping and turning that cash back into mortgage overpayments. So we typically find that if someone does, say, like £100 shop at their supermarket, on average, they earn anywhere between £2.50 and £4 on that shop. But when you push that towards your mortgage, which you can do via the app within just one tap, the compound interest benefits of that is normally 3x the amount of money that you actually put in terms of cash back. So you can imagine if you do like a £2.50 reward that you get through shopping through the app, that can ultimately save you, between £7.50 and £10 on a single shop. So you can start to see how doing that on a regular basis really starts to compound. And the way we send the money to the lender, we work with 14 of the largest lenders in the UK. So we work with the likes of Barclays, Santander, NatWest, HSBC. We can cover about 85% of the residential mortgage market. And we're about to add 2 more lenders, and that will take us to 90%. So there's a big chunk of the UK mortgage market that we can help. And the way you connect your mortgage is very nice. So it's not like you have to go and find your mortgage offer document and type in what's my mortgage balance and what's my monthly payments and what's my, all the details that you think you might need to connect. The beauty of like the technology that we built is that you can connect any current account. And what that allows us to do is to verify you, to make sure that, you are who you say you are, because it's very important for Sprive to like make sure we've got a zero fraud on the platform. And then it allows us to be able to like essentially talk to your lender and get the information that we need with your consent, and that facilitates and powers the automation and the one-tap payments to your mortgage lender. And then obviously visually you can see how much interest you're on track to save. And then you talk about things like the auto saving, which is the optional feature that we have where someone could turbocharge if they feel like they can afford to. And again, because they link their current account, we can kind of get an idea of their spending patterns. So Christmas is a good example where a lot of people will spend a lot of money on presents and things like Christmas dinner. And so we can see your rate of spending is very different to the norm. And so that means that we will actually set aside a lot less spare cash compared to like other weeks where maybe you're spending less and you're saving more. And we ask the customer to set limits. So we'll say, what's the minimum in a month you think you can afford? And what's the maximum? And so if you set the minimum at, say, £5, we're never going to take more than £5 a month and put that towards your Sprive account. And even then, when we do squirrel away the money, it sits in an account in your name, and then you have the control. So you can, if you need to, withdraw the money back, or you can send it to your lender, or you can do, some of it I want to like take back, some of it I want to pay to my lender. So you have a lot of control and lots of flexibility. And even with the auto saves, the money where we take, you have the ability to cancel, pause. So if you decide that actually this week's not a good week, you can cancel the save, you can cancel it for a month, 3 months. So you have a lot of control in terms of how you can effectively overpay your mortgage, which is very different if you try to do like a standard direct debit with your lender, where it's very, very much you're committing to every month, I'm going to put this amount of money and put that towards my mortgage. And you have no visibility in terms of like how much interest you're on track to save, how many years you're on track to knock off. And it's very motivating when you're going through a journey to be able to see, okay, now because of what I'm doing, I'm on track to shave 2 years off my mortgage. And then you can maybe decide, can I change my behavior to maybe increase that? And that's really empowering as a homeowner. And you touched upon it, Paul. There is this concept called early repayment charges, where most lenders allow you to overpay 10% of your outstanding allowance. So if you have like a £200,000 mortgage, on an annual basis, you're permitted to pay a maximum of £20,000. And then if you pay more than that, you get hit with penalties. And sometimes that can be very scary because the last thing a homeowner wants is to be hit with penalties. And so through the app, again, we give you widgets where you can track how much of your allowance you've used, which is great because when I was overpaying my mortgage personally, I was doing that all through Excel spreadsheets. So yeah, there's a lot of automation there, and we spend a lot of time trying to make things as easy as possible. And even on the shopping side of things, you can buy things with one tap, and then we just make it super easy for people to be able to kind of get on this journey of being able to pay down their mortgage and save interest.
Yeah, you're in an interesting space because like you're kind of at this intersection of like fintech, but also sort of like consumer, finance and like behavior change, which was fascinating. We're seeing a lot more tools pop up, a lot more startups like focus on, behavior change, which is really interesting. And then also like long-term wealth building as well, which I think is obviously important and critical for a lot of people with families, and they're just trying to, provide for future generations. What have been like, we're going to get into growth here. Like what have been some of your biggest challenges in growing the company, and I'd love to understand kind of your approach to trust and regulation in a highly regulated sector like fintech, and building that credibility early on, and also designing for like long-term behavior change that you want to see from the people you're working with.
Yeah, so I think trust is very important. And I think like the simple things like connecting your current account so that we can access your mortgage data. For what we found is that actually 30% of people who download the app will connect their current account. And that was even at the beginning of when we actually started building Sprive, when, you could say the trust levels were obviously a lot lower, because to get your first customers, like your first 100, 1,000, now we have, I think we're close to 100,000 homeowners now in the last 30 days that have used Sprive. So, we're no longer at that kind of real infancy point. But even at that point, we found that people would be willing to trust us. And I think it's partly how we frame the problem. It's such a big problem that that obviously people want to find solutions, and so there's a certain profile of customers that are more willing. I think what is worked really well for us as a product is 50% of our growth is word of mouth, and kind of customers telling their friends and family about how they're getting value out of the product. And I feel like when you see that, I think that really helps, because people trust the people around them, and if they're seeing value, then they're more willing to kind of give it a try. Our customer scores are very strong. So if you go like on Android, we're at 4.9 App Store rating, and so people again like to look at a product, read reviews.
Do you
So
guys have
that
any kind of
really,
like referral? Do you have any kind of referral system in place that like formalizes that?
yeah, we do. So it's changing. It's always changing. We're always looking to do different things. At the moment, we're running a campaign for the next 4 weeks at least, where someone is going to win £1,000 towards their mortgage. And we'll sort of do little like prize draws, which is nice. And then for new customers, every week for 4 weeks, someone's got a chance for their mortgage to be paid off for that month. So a nice little welcome. So we always try and do like nice, interesting things.
Yeah.
And so yeah, referrals, yeah, there's always some sort of benefit for both the new
And
people joining and the existing customers.
And talk to me about, like, I'm always fascinated by like the stickiness of products. Like, like we always talk about how like have people loving your product is the best moat, like it just is. And I think that's fascinating and humbling for me as a marketer, because and a growth strategist, because it's like, man, like if you just really nail the product, like you need less of me. So I'm willing to say that and admit that. Would love to understand if are there moments that you've seen, your customers using, Sprive, and like part of their journey where they just feel like, okay, this is the moment where they really get the value, they feel it, and they decide to stick with you? Where are the sticky bits of the product?
Yeah, so I think it goes down to the shopping. So we find that once people start shopping and do their like grocery shopping, because it's a regular cadence, it's something you do every week. Once they've done it once or twice, it becomes a habit, and that kind of keeps them on the platform. And then they'll be like, oh, actually I shop at Amazon, or I shop at Boots, or I shop at John Lewis. And then they do, and then but actually I'm going to book my holiday through Sprive, or my next Airbnb, or my car insurance, or my home insurance. And it kind of adds on and has a compounding effect. So we find the supermarket shop is a really nice way to kind of get people going. And once they know how it works and they see that it works, then the first time they do a shop and then they pay that money to their mortgage, I can imagine customers being, does this actually work? Does it actually hit my mortgage account? And so once they see it and they really trust it, the stickiness is very strong.
Yeah. And pulling back a bit, so like talk to me about like your broader growth strategy. Like, have you fundraised? I know you've maybe got a big announcement about a famous show that maybe you're going to be appearing on soon. Talk to me about like how you're staffing your growth and marketing function. Like what does your growth plan look like? And how have you staffed it?
Yeah, so in terms of like I mentioned, half of our growth is kind of word of mouth and referrals, and then it's worth probably mentioning another 25% is like social media influencers and just social media. And what we tend to do is we find customers who actually use Sprive in their own personal life, who then have this willingness to then talk about us on social media, and it kind of really helps, because obviously that gives us reach in terms of people hearing about us, but it gives us real kind of it's really authentic because they're practically using the product. So it's not like we're paying them money to essentially market. It's something they're really passionate about, and people see through that, and they can really kind of relate that this is a real thing that's adding a lot of value. And so that's been really, really kind of good for us. And then we actually have a TV advert that's currently live across kind of Channel 4. So that's been a nice way to kind of create brand awareness. And we have raised some investment. So initially, when I had an idea, because it's fintech and it's regulated, it's very difficult to get something like what we're doing off the ground. We're just kind of by just bootstrapping. So we process literally hundreds and hundreds of thousands of payments, and we effectively got accounts that essentially customers are creating to facilitate the payments towards their mortgage, and we do like anti-money laundering checks and all the things that we're required to do, and the security posture behind that, and making sure we've got the right team, and the people that run like my engineering are very, very, very experienced and work for top tier banking institutions, and all of that doesn't come for free. And so we've raised 3 rounds so far, a total of like £4.5 million in funding, and then we've also got some TV investment into the business. Yeah, it's growth has been good in that the customers, like you said, if they love the product, that kind of takes care of itself,
Yeah.
and that's really helpful, and that's helped us grow massively. But also, you need to make sure you've got the right team, the right technology infrastructure,
Yeah.
and then at the same time, it is expensive, especially in a country like the UK, to kind of tell people you exist. That's half the challenge. Once people know you exist, it's a lot easier to then get them to start trying the app and using the app. But yeah, that is one of the hardest challenges, building a brand that people know, as in you turn into like a household name. That takes a lot of investment and a lot of creativity, I would say.
Yeah, yeah. I mean, I think too. Like, well, congratulations first of all on fundraising success, and I like how you framed like, hey, we're in fintech, and like this, we need to get this right. We can't, have kind of janky technology that is, messing up people's finances. So like that requires capital investment, and so like I think it's important for listeners to understand like that where that investment goes and how you need to kind of fundraise. You can't just like enter the market like anyone, and that investment allows you to operate with rigor. So want to pivot to your background, because I think you've got a really interesting background, finance, venture, startups, and dig into your personal journey a bit here. You had, some nice high paying jobs that allowed you to pay off your mortgage. You decided to start Sprive from scratch. I'd be curious, what did you learn, from like analyzing companies, actually building one yourself, and that shift? And then I'd love to understand like how your background in investment banking and VC, what lessons translated well into actually being an entrepreneur yourselves, and maybe which ones didn't.
Yeah, so I think it's worth mentioning initially why I want to be an entrepreneur, because I was at Goldman Sachs for about 14 years, and it's a great organization to work for. They pay well, and everyone there is very driven. And so when I kind of was at university, and I got an internship role initially, and then a graduate position, I was very focused on kind of the corporate career and kind of chasing that next promotion. But there was always a needle inside of me that said I wanted to start my own business. My dad was an entrepreneur, and I've seen firsthand how entrepreneurship can lead to generational wealth. So to give you some context, when my grandfather was 12, he grew up in rural India on a farm, no education, and then he took the risk to kind of go with his uncle without his dad's blessing to actually East Africa and work in construction. And then in his 30s, started his own construction business. And that allowed him to then build a little bit of wealth, not like life changing, but enough to give my dad a good education in India. And he went to boarding school, and he learned in English, as I think a good example. And so when he had the opportunity to come to the UK, he literally had £5 in his pocket, but he was able to start again his own business. And again, that gave me the opportunity to be able to go to private school. My brother went to private school, and so having a very good education that helped ultimately allowed me to kind of get a good education to kind of land a job like the one I did at Goldman Sachs. And so yeah, for me, they left like a very big legacy. And for me, money's not everything. It was also what can I achieve? And I think the organization, the kind of the career that I had, you work with very, very smart people, but it's very, very intense. And so it helped build this kind of this mindset of being the best and trying to do your best and go above and beyond. It's very common in an organization like that where people work 70 to 100 hours a week. And it's not just FaceTime. They're really kind of like pushing themselves to the limit and trying to, be the best versions of themselves. And I was there, and and not to be arrogant, but I felt like I was doing very well there, but I could do more. And you deal with a lot of high net worth individuals, and And you do meet like entrepreneurs along the way who've taken that risk and done really well from it. And so for me, there was the kind of the social side of things that I've gone through the mortgage pain point, and I feel like it's scary how financial institutions make money. And the way they do that is through things like mortgages, and they make a lot of money. And at the same time, I feel like there's more in me than just be able to like take a salary, and ultimately you only getting paid a salary because you're making someone else more money. And so I just felt like, taking that kind of risk was definitely worth it. I truly believed that I could build something like this. And so, if you back yourself, then I feel like you only live once. And so I wanted to kind of never look back with regrets. And having the kind of that background allowed me the capability and the skill set to access a network that potentially, if I didn't have that background, would be very, very challenging. I wouldn't have the credibility. So raising capital would be a lot more challenging. Building the relationships that I have would have been a lot more challenging, especially on the lender side. And having the being regulated, an example, like the FCA won't just allow anyone to build a fintech, and so it was very, very key. I think the other thing I'd mention is that Goldman Sachs in particular have a very entrepreneurial mindset. They teach you from the beginning of your career that treat the company like it's your own company, and come up with ideas and try to do as much as you can with as little money as possible. And that put me in good stead because it allowed me to then really hustle. And you're not given everything in the suit like with a silver spoon. So that's really important as an entrepreneur, because you're literally starting from idea to actually building something that ultimately is helping hundreds of thousands of homeowners eventually, if not millions.
That's an incredible family history. And I love what you said about like building generational wealth and how that, like interestingly, like, you were put in a position, by your family's entrepreneurship and you're trying to pay that forward in a beautiful way with like helping people kind of unlock, what, this new reality that they could maybe be an entrepreneur if they figure out, getting their mortgage sorted and everything. I love that through line. That's really beautiful. And I really hear what you're saying about backing yourself. I always say to people, if you want to learn a lot about yourself, a lot about the world, and a lot about other people, start a business, like become an entrepreneur, because it is mind blowing the things you learn. So kudos to you for that. And yeah, the last thing I'll say is I think what you're doing is it's going to touch a lot of lives in a really powerful way. So it's it's a lot of tech that we see. It's like, oh, here's this great new plastic or this deodorant or something like that. It's like, we don't really need that stuff. Like you're building tech that's meaningfully, quietly but meaningfully, changing people's lives. And it's not hype, but it's just helping people feel more in control of one of the most stressful parts of adulthood. And like, that's money and mortgages, man. So thank you for, we're called Tech Can't Save Us, but we talk to folks like yourself who actually are really helping the world and saving the world. So thank you for what you're doing. Really appreciate you, Jinesh.
No, thank you for having me, Paul.
Yeah, man. Good luck with Dragon's Den, and let our listeners know where they can see you, watch you, where can they find out more about the great work you're doing at Sprive.
Cheers, Paul. In terms of your listeners, yeah, we are on Dragon's Den. So that's 5th of February.
Nice.
So that would be interesting in terms of seeing how that goes. I'm on LinkedIn, so if anyone wants to connect, find me, and if you send me a connection request, I will, I would happily accept. And obviously, my goal is to take Sprive and make it, really the biggest thing it can be, and help as many people as possible. And so we'll carry on trying to help as many homeowners across the UK kind of pay down their mortgages and save interest. And who knows, maybe we'll move into like credit cards and student loans and car finance. It's something like 44 million people in the UK with some form of household debt. So yeah, a lot of people we can help.
It's exciting. It's exciting. Well, again, appreciate what you're doing. For our listeners, we'll drop those links in the episode description, and please give us a review, give us a 5-star rating so we can keep bringing amazing guests like Jinesh, CEO of Sprive, onto the pod. And thanks, everybody. Thanks again, Jinesh. And as always, this has been another episode of Tech Can't Save Us podcast, brought to you by Literal Humans. And we've had a great episode talking to Jinesh Vohra, the founder and CEO of Sprive. Thanks again, y'all. Thanks, Jinesh.
Cheers. Thank you.